I think that also explains why gold is exploding, because as you might know, institutional investors and sovereign investors only flee towards gold when there's the smell of war in the air, or there's a smell of monetary reset in the air. Well, we've got both now, so I'm not surprised that the gold price is being revalued by market forces. You could see a revaluation by central bankers initiative, but this is just a revaluation by market forces. I think the real reason is that the price discovery mechanism is moving from west to east. The Shanghai Gold Exchange is now powerful enough to compete with the COMEX.
Willem Middelkoop, founder of the Commodity Discovery Fund, believes gold is undergoing a revaluation not through coordinated central bank action, but organically, driven by fear stemming from geopolitical instability and growing concerns about the global financial system. Despite ongoing tensions in the Middle East, gold continues to consolidate below $3,400 an ounce, suggesting that broader macroeconomic conditions remain the key driver of long-term price direction. Middelkoop also points to a fundamental shift in the power dynamics of how gold prices are determined. Traditional price discovery through Western institutions, such as the COMEX, is gradually being overtaken by the East, particularly through the Shanghai Gold Exchange. China's growing dominance in the physical gold market is reshaping how prices are set, with actual demand for physical bullion now playing a greater role than speculative paper trading. He highlights that the US dollar, which is increasingly used as a geopolitical tool, has prompted countries like China and Russia to seek alternatives. Gold has become the asset of choice in this transition. As Middelkoop puts it, "He who has the gold makes the rules," a sentiment echoed even by Donald Trump in past remarks. According to the World Gold Council, gold is drawing more interest from official institutions than at any point in the past decade. Central banks have purchased over 3,000 tons in the last 3 years alone, and analysts expect another 1,000 tons to be added to reserves in the year ahead. This sustained accumulation underscores the metal's rising importance in a shifting global monetary landscape. Just last week, a report from the European Central Bank noted that gold had surpassed the euro to become the second largest reserve asset held by central banks. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
I was a bit early to this party. I started to buy physical silver in 2003. Needed to wire checks to North America to receive a 1,000 ounce silver bar by mail. So that was almost 25 years ago. So I've been warning about a coming crisis in our monetary system almost ever since. I was a Dutch stock market commentator on Dutch TV between 2001 and 2008. And we always had these discussions in our team, in our editorial team, because these guys thought that I was nuts. Because, Willem, why do you always cause problems? Because there's not a problem in the financial system. Well, then Lehman arrived. You might not be aware, but I published my first book only in Dutch in 2007. August 2007. That was the month the credit crisis started. And ever since, I've been worrying and I've been thinking about what would come next. And in that book in 2007, I wrote that I could envision that it might take another 15 years before this dollar-based system would reach really the end game. Well, I had 15 years, then you're 2022, 2023. And now we've reached the point that it's not the gold bugs warning that a monetary reset is next. If you look at YouTube, everybody's using the word reset now, and it's on main stage now. It's being discussed on main stage. I think that also explains why gold is exploding, because as you might know, institutional investors and sovereign investors only flee towards gold when there's the smell of war in the air, or there's a smell of monetary reset in the air. Well, we've got both now, so I'm not surprised that the gold price is being revalued by market forces. You could see a revaluation by central bankers initiative, but this is just a revaluation by market forces. I think the real reason is that the price discovery mechanism is moving from west to east. The Shanghai Gold Exchange is now powerful enough to compete with the COMEX. And I wrote a piece 6 months ago for OMVIV, which is a monetary think tank, London-based, that you could expect a short squeeze when the musical chairs, when the music stops. Everybody wants to sit on the last chair, and there's a run on physical. But it's my understanding, it's our understanding, we're just at the start of this whole process. It's not the end, it's just the start. Well, this reminds me on a few notes which were published on the official website of the Dutch Central Bank, in which they stated that we still need gold because when there's a huge crisis within this financial system, you need the gold to bring trust back into the financial markets and into the system. So this has been acknowledged not only by the Polish but also by the Dutch. And after the US has weaponized the dollar, I think we're now in the phase that countries are starting to weaponize gold. I'm not pointing to Poland, but I'm pointing to Russia and China. They do understand he who has the gold makes the rules. And even Trump has posted that exact line on his social media. So, and we come back to the point I made earlier. We're on main stage now. Everybody's talking gold. Everybody's reading about the history now and about the history of gold being the last man standing from a monetary point of view. There's not one currency that survived over 100 years and was unbacked. So all fiat currencies died. I made an appendix in the big reset. Actually, you can still download the book for free at our website. And in the back, you can find an appendix with all currencies which aren't around anymore and have been around for the last 250 years or have been in existence in the last 250 years. And there's not one which survived a longer period and back over 100 years. And I think the Dutch guilder had been around for 180 years, but most of the time it was gold backed, of course. Well, you have these levels of information. You know, some news is only shared among central bankers. I mentioned the OMVIV. I'm a member of the advisory council of the OMVIV, and the OMVIV is a very interesting place. It's a private think tank. It was started by David March, and it's the only place where the central bankers are meeting with the private sector. And of course, we all need to pay a fee to be part of that. And what I learned there, what I got confirmed there, that you have all these levels of information. So some information is only available among central bankers who have these monthly meetings in Basel, and then you have another level of information, and then let's say the Goldman Sachs of this world. They hear from their friends and their contacts in the world of central banks, and sometimes stories are also shared with them because central banks need some help. So you have let's say the very smart money. They have a better understanding of what's happening. And then it trickles down. But once it reaches the retail audience, or once it reaches the mainstream media, you know, it's more propaganda or more spin than news. So I for myself always try to get as close to the source, as close to the higher levels as possible. And I see myself within OMVIV as almost a fly on the wall. So be able to listen in what's being discussed and what's the mood of the industry. And I'm a bit shocked and surprised to learn that in central bankers circles, they don't dare to openly discuss that we might lose the control over the financial system. But I always say, watch what they do, not what they say. And if you see them buying gold in all these large amounts, you know they're pretty scared or pretty nervous about where things could lead to.
The World Gold Council's latest central bank gold survey released Tuesday recorded its highest ever participation, with 73 central banks responding. The findings underscore a significant shift underway among emerging market central banks, a strategic move away from the US dollar and toward gold. At the same time, 76% believe gold will constitute a larger portion of total reserves, an increase from 69% in last year's survey. This marks a growing recognition of gold's relevance in a changing monetary landscape. In this year's report, gold's performance during times of crisis gained more importance among central banks, reflecting current global uncertainties. Last year, gold was more often valued for its role as a long-term store of value, but now, resilience in crisis has taken center stage. Willem Middelkoop emphasizes that gold never truly disappeared from the global monetary system. Central banks have consistently held it in reserve, with countries like the US maintaining over 70 to 80% of their reserves in gold. Unlike oil or Bitcoin, gold remains the universal standard held in official vaults. Its continued accumulation by central banks signals confidence in gold's enduring role as a foundation of monetary stability. Let's get back to the interview.
When people ask me if gold will come back into the monetary system, I would say it doesn't need to come back. It's already there. Look what all central banks have in their vaults. They don't have oil there or Bitcoin, or they have lots of gold. And almost all countries have lots of gold. And some only a few percent, some over 20%. The US has over 70 or 80% of financial reserves in gold. So gold has always been part of the current financial system, but it was ignored. And the US tried to use its Western friends to make them sell part of their gold holdings, telling them gold was no longer an essential part for the financial system. But what did the US do? They didn't sell any ounce themselves. Well, they don't have much to sell, because if you study the documents which point at the end and the collapse of the London gold pool in March 1968, we learned, and that these documents are known and published from inside, that Fort Knox was being emptied. There weren't enough good delivery bars available in Fort Knox in March 68. And I think that's also the reason why Trump and Elon Musk are very silent now about a audit of Fort Knox, because if you would go there, you would find probably you would get a negative surprise. And I think Scott Bessent understands this very well, and he's toned them down because this is just too important. And actually, I'm working on a presentation to show our audience in here, especially in the Netherlands, and our clients, what's really going on with Fort Knox and the New York Fed. Because if you study the pictures, I studied all pictures being published from Fort Knox and the New York Fed. It shows a gold facade, and I think I can prove it. And it, together with these historical documents, needs to check to check the bills and the statements from the Dutch government. And our accounting office came out with news last week that they are doing a study on Dutch gold reserves, past and present. And actually, they asked the public to help them and come with input. So I'm preparing some input to help their research. So gold, to come back to a question, gold has been always part of this system. It's still part of the system, but it's getting more and more recognized that it's part of the system. And it will become a more central part of the system. And as you pointed out before, the banks need a revaluation of gold to help with their balance sheets. And of course, the US is the only one which is still using mark to market. So the US will likely, US is the only one not using mark to market, but the historical cost price. So the US might go mark to market. So that will help the Trump administration to use the profits by this revaluation to become more active in Bitcoin, because I'm quite convinced that the Trump administration will use crypto as well. But gold will become will stay and become a very important part of the international financial system. You already described the build of a new monetary or trade system. And so this is not a situation like Bretton Woods, where you had this one big conference and the US put its dollar plan on the table and we could vote if we would accept it, yes or no. I think the Chinese are playing it very smart. I studied China quite a bit. Two of my books have been translated into Mandarin, and I traveled quite a bit there. So I think it's a fascinating country with a fascinating history. You know, the system has been more or less the same for over 5,000 years. Gold has been real money for over 5,000 years, so they do understand gold. They had hyperinflation in the late 1940s, as you might remember. Actually, the Communist Party was able to, have a successful revolution because of the hyperinflation of the 1940s. So they understand this very well. And they're building this new trading system, and they know they need gold, maybe to settle bilateral trade, maybe to start a full-backed currency one day. I don't think that's their main goal, but they know they can do that when needed. And I'm a bit afraid that the West will keep sticking to its dollar, system while being in decline and having more and more debts and getting more and more stable, while the East is building their own, trading system, getting more powerful by the day and by the year, and starting to really compete with the Western dollar system. So you have a bifurcation of the international monetary system, the Western system, as we all know it, and then the new BRICS system, which is laughed at by the mainstream media in the West, and we then don't take it serious until the day we need to take it serious, because they will say, you have to pay, you can buy our commodities, but you have to pay with gold, Bitcoin, or whatever. And actually, Putin said that after the start of the Ukraine war. Most people forgot it, but we here in Europe were relying on Russian gas, and we don't have Russian gas anymore. That's why we pay triple the price for energy than you guys in the US. But why don't we have a Russian cheap energy anymore? Because we refuse to accept Putin's offer to pay with gold or Bitcoin, but he would accept euros or dollars. So in a way, this divide is already there, but most people don't see it. And the Western mainstream media is so arrogant, and they just laugh about it. But I think soon we might start crying. Remember Trump once telling the Germans that they could lose the Russian cheap energy, and they would be, their economy would be really harmed because of the high energy pricing. And that was the German delegation at the United Nations. They were laughing when Trump was saying that in their face. And now Germany is having some real serious problems here in Europe.
The increasing influence of Eastern markets, particularly China, in shaping global benchmarks, underscores a shift in economic impact. Meanwhile, the rising demand for physical holdings over symbolic claims reveals deepening skepticism about the long-term stability of fiat systems. This transition signals that trust, not just liquidity, is becoming the currency of the future. Could this global pivot toward tangible wealth and decentralized price discovery mark the beginning of a new financial era, one less anchored to legacy institutions and more to real-world value? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.